What's up, guys? JJ Fade 23. I'm just going to make a quick video to help you guys stop blowing up on the front side of trades. So everybody likes to short parabolics and everything, but you can get a lot of good trades from parabolics, but you can also blow up with the quickness on parabolics. But I'm going to teach you a trick that's going to help you. All right. So first of all, guys, if you don't know what pivots are and daily levels, you shouldn't even be trading parabolics. First things first, real quick, guys, a pivot, to me, the greatest pivots are the ones that stand out the most, all right? The clearest ones on the chart, right? Like this is a great pivot. Now, price didn't reverse hard from this pivot. It tried to push up and it failed, but it's decently stands out. It's not the greatest pivot I've ever seen, but we'll call it a level. This is another one. Now these are pivots. They're not as good as like this. I love when stock's coming down, tries to spike, rejects hard. It also stands out in the crowd. Very easy for other traders to see. All right. So that's another one. Now this is a gap. I call this personally a gap open pivot, where it's where a gap used to be, the opening of a gap. And this is also a multi-touch pivot, which I call multi-touch, which I really love too. Et cetera, right? Another pivot right here, pivot right here, pivot right here. The price didn't go up there. It doesn't matter. Point is, guys, so this is how you don't blow up on parabolics, or more likely to not get carried away. So when a stock's spiking, going parabolic, first thing you want to see, all right, you want to make sure that it rejects, gives you a nice rejection or tops out near a pivot. So we already know that we have a pivot here, right near $13, all right? So look at the volume here, right? Not a super lot of volume, less than 400,000, but it's making its move up. It's making its move up. Now it starts to top out. You get a trim break here. And even if you don't get a trim break, whatever the case may be, you get some kind of topping near the pivot, near a pivot, and then a decent enough sell-off that you could say to yourself, hey, the top is probably in. Now what you want to happen is to get a bounce at least to the 61% fib on half as much volume as the major move up. So over here the volume's around 460,000 at its highs, 426. Now you had a pretty good sell-off. You get a 61. The minimum is 61. I like it to be at least above 61 or greater. The higher it goes, the better, because you're risking off the previous high. But you notice this here, look, 400,000, 459. Now look at this, 136, 244. So the volume's almost cut in half right here. And you have a fib bounce that it goes at least to the 61 fib. Anywhere in this range is usually where they bounce to. This is my favorite range. Sometimes they go all the way up, but usually it's, somewhere in the 61 to 78% fib gives you a nice short right here, risking off of here. The minimum is the 61 fib, remember. Because if you short it down here on a bounce, the risk reward's no good. You're going to short it down here, risking the highs, or you're going to try to do what some people do, is they try to short it down here and use a random place as a stop. Because that's just, that's like basically what some traders will do. They'll short it right here, right? They'll short it on this tiny bounce. They'll short it right here, put their stop right here. They'll get stopped out right here, then it will dump without them. That's why? Because they put their stop at a place that's not that important. Higher day with a pivot is that important, especially after you've seen a decent sell-off, and now you got to bounce back up. Even if you short it here, right, 11.20, risking off 13, you want to have your stop a little above higher day. You're risking $2 is the reward there. Yeah, maybe not. But usually when you get into the 61 to 78% fib range, now the reward is there. The risk is smaller. The reward is there. Obviously, you don't want the stock to drop too far before it bounces, because the more dollars it drops, the more range it's going to have, and then the 61 fib is going to be farther away from the top. So, just you got to make sure you look down and say, hey, where could this stock go? It could go back to maybe here, it could go back to here. Is the reward there, right? That's all. Most important thing for me, risk reward. I'm not going to take the trade with $3 risk to try to get $3. If it gets up to here, 11.70, or here 12.20, yeah, now I'm risking 75 cents to maybe get $3. Hell yeah, I'm taking that trade. But remember, I want to see the volume cut in half and the backside bounce be on much, much lower volume. Now you have a set risk. You look for your entry with good risk reward, and you do your thing. Don't be a sucker trying to short on the front side over here, getting stopped out, short again, stopped out, short again, or worse, scaling in dollars, and then you think you did a great job, and then it comes all the way back down. You risk $2 to make $1. Great, and then the next trade that keeps going and going and going blows you up. Don't do that. Remember, just wait for the stock to top out at a very key pivot on the daily chart, and then try to catch a low volume backside bounce with your clear risk set at the previous high. Or guys, another little tip, if the pivot, check this out. If the pivot is actually at 13.15 and the high was actually at 13, I would still maybe, when it drops this far, you can really use this high, but sometimes if the range isn't too big, I'll just put my stop even above the pivot that's right there too. That all comes down to how much range is. And this one, I probably wouldn't do that because I'm already risking, maybe like $1.20, so I don't want to give it more. And it really shouldn't go back above this high, but, something to think about. But in general, this should help you if you want to trade parabolics and you don't want to get blown up on the front side. And not just parabolics, day one gappers that don't just fade all day. If they start running and running and running and breaking out, eventually, usually they do close weak, like most small caps, but this is the easier way to trade them, not trying to catch the top. So, all right, I don't want to make the video too long, but thanks.